again, I want you guys just to really get in the habit of doing that. Get in the habit of doing what we talk about. Trust me, it's the little things that make your success. You know, the little tweaks that you do, it's the little things that you do that really makes the difference in your success here. So anyway, just because part of yourself, just because part of yourself and part of your training, and for your business. Well, we're behind with this, so I'm going to go ahead and
We are, yeah, we're live. Hopefully they got audio. Hopefully they got the link here shortly and they'll be able to. The good thing is we do have it recording now, so if they do miss it, we'll be able to get it to them, and hopefully they'll be able to jump in here shortly. But we're going to go ahead and get started. Again, apologize for the technical difficulties we've had here. Today we're going to do a little bit of training on just kind of an introductory to the mortgage protection market, what it entails, just the different benefits to it for the, some of the benefits for the agent, some of the benefits for the client, and just a little bit about understanding the markets somewhat. So now, again, like I said, what is mortgage protection? What does it offer the client? What does mortgage protection offer us as agents? And then, understanding how to generate your clients and then knowing your numbers. That's very important. So we'll cover some, hopefully some pretty good topics here. Now, as far as mortgage protection and what it offers the client, your basic death benefit. We're going to pay off the mortgage in case of a death, right? Now, say they have the house paid down, say they lived in the house for 15 or 20 years, something to that effect, and they originally started off with a $200,000 mortgage, but they only owe $75,000. They signed up for a $200,000 mortgage protection policy initially. Well, they're going to receive, their beneficiary is going to receive the full death benefit of $200,000. They're then going to be able to take those funds and pay the mortgage company, right? Because we all know the mortgage company is going to be knocking at the door, asking for payment if something happens. They're not worried about a death in the family, a heart attack, a stroke. You can't give them a death certificate to make the mortgage payment. So they're going to cover you in case of a death. We're also going to be able to provide cash to make your mortgage payment or other expenses if you become disabled. So, yeah.
What definition on that is that? What's the definition of
It depends on the carrier that you choose to work with or what your clients are looking for. We have disability that covers any occupation. We have disability that covers in case of accident only. We have disability that covers in case of accident or illness. So it covers no matter what. So it just depends. Yeah, it just depends on which direction that you're taking your client, primarily what they're looking for, and then that'll kind of determine which carrier that you're going to use for them. So if a client says, Wayne, I want to make sure that I'm covered no matter what happens. If I get, if I can't work because I'm sick, or if I can't work because I'm in a car accident, I want to make sure I'm covered no matter what. Then that you're going to want to cover them with the total disability product. So yeah, that'll just, you'll learn about that for a future product training and stuff. But yeah, we do have different types of disability. Another thing with the disability, we can adjust the monthly coverage. We can tailor that to their mortgage payment. We can include their taxes and insurance. So, if their mortgage payment's $1,000 plus another $200 taxes and insurance, we can, set them up on $1,200 a month disability. Some people like to do a little bit more to help cover some other expenses. What's great about disability with the carriers that we work with, your client receives the check from the insurance carrier. So it doesn't go directly to the mortgage company. So if, you're in a position where you need those funds for something else other than the mortgage payment, you can definitely use that for, accordingly at your discretion. Also, we're going to pay a portion of the death benefit, again, if you add this to your policy, if you're diagnosed with a critical illness, cancer, heart attack, stroke, many of these health ailments that people run into. Now, if I ask you here, is anyone here exempt from heart attack, cancer, or stroke? Not at all, right? So, there's a chance, that someone could experience that. And normally, when people experience some type of critical illness, what happens? They can't work, which means they lose income, right? So they're having a hard time making payments. They're having a hard time getting things taken care of. So to have the ability to tap into something, within your mortgage protection policy to make those payments, again, you're going to get access to a portion of the death benefit. Premiums will never increase and the death benefit will never decrease. A lot of people have a mortgage protection policy that may be either on an annually renewable basis, which means it goes up every year, or it's only guaranteed for 5 years, or it's only they have a 30-year policy, but it's only guaranteed for 15. Those are some things that as agents we can look for when we're sitting down talking to our clients. Well, Mr. Agent, I already have my coverage taken care of. Oh, that's great, Mr. Client. Do you mind if we get that policy out to make sure that you have what's best for your family? They'll pull out the policy, you can review it. Oh, look, after 5 years, it shows that your premium is $1,200 a year right now, but after 5 years, your premium is going to go up to $3,800 a year. Are you prepared to pay that extra $100 or so a month to cover that? Oh, no. Well, let's get that locked in right now. So, again, the policies that we cover our clients with, they're guaranteed, they're locked in, and they do not decrease. As I mentioned earlier, as they pay the mortgage down, so, they start off with the $200,000 mortgage, we cover them for $200,000. 15 years down the road, they owe $120,000. After paying on that, something happens to them, we're still going to pay their beneficiary $200,000 what they initially set up for. So the benefits do not decrease. Your clients get the option to get all of their money back. That's huge. We talk about it. You hear me say this. You're not going to get your money back with your homeowner's insurance. You're not going to get your money back with your auto insurance if you don't have an accident or if your house doesn't burn down, right? So with this, if you outlive the policy, you have the option to get your money back. What's neat about this, and when I'm talking to my clients, I say you can think of it like a savings account with protection. Here you have somewhere that you can set your money aside. If something happens to you, your family's going to get a check for $200 or whatever amount that is. And if nothing happens to you, you simply go back to that savings account and take your money back. I mean, it really is a win-win type of situation. Now, of course, they pay a little extra premium to have that on their coverage. Let's say their premium is $50 just for the death benefit, but it's $70 to get their money back. So now they're paying an extra $20 to get their money back. That's not a bad extra $20 to spend to get all of your money back at the end of the coverage. What's that? The death benefit, yeah. Now, depending on the carrier, some carriers refund all of the premiums. Some carriers only refund the premium that you pay for the death benefit. They don't refund the premium that you pay for disability or critical illness. But in most cases, people are looking to make sure that their house is protected in case of a death, and so you cover them with that. You add the return of premium, and they're going to get all of their money back. And again, it's offering, we're offering the peace of mind of knowing that families will not lose their home. You take that to heart. You have that conviction about yourself when you're out there working with your clients, when you're trying to figure out a product to get your clients covered with, and your clients are going to recognize that. They're going to see that, and they're going to feel that when you're sitting down across from the kitchen table or next to them at the kitchen table trying to work together to get a plan going for them. They're going to sense that. They're going to know it. So, again, just take that to heart and understand what this does and understand the value. That way you can convey that message to your clients. You hear BJ, talk about what Zig Ziglar says. Sales is a transference of feelings, and that is so true. People are going to feel, exactly what you're feeling. They're going to be in the same mood that you're in. Now, what does mortgage protection offer the agent? As far as the agent, this is a niche market, with a great need for coverage. We talk about the insurance industry being, a $1 trillion, $34 trillion industry per year. That's huge. There's not very many industries that are $1 trillion industries per year. You got the mortgage industry, the medical industry, and I think it stops there. Unless someone else can throw another name out, I don't know of any other industries that are $1 trillion industries. So you think about that. We're in, and there's so much involved in insurance, right? There's so many different markets. You have property and casualty, homeowners, car insurance. Then you have life insurance, critical illness, health insurance. There's all types of different insurance. So it's good to have a good focus when you get into the business. And, we talk about 3 different niche markets. We talk about final expense, we talk about mortgage protection, and we talk about the IUL market. One of the biggest reasons is because those particular markets give us the ability to reach out to people that need the coverage. When you mention mortgage protection, talk about protecting someone's home to someone, their ears pop up. They want to do that. They want to protect their family. When you talk to someone about making sure that their family does not have to come up with the money to pay for their final expenses, they want to make sure and get that taken care of. Now, when you talk about just life insurance in general, they're not as eager as excited to get it done. I'll do that later. But when you talk about different, and basically it's the same thing. If you die and you pass away, your family's going to get a check, right? so what's the difference? That's life insurance, but in their minds, that life insurance is for a specific need. That's for one of their greatest assets, their home, one of their largest investments, something that they've been putting their money into for many, many years. So to them, that's one of their greatest investments. And, so again, understanding the niche market and just knowing that you can, work within this market, become a professional in this market, and it can really take care of you. And now we also have the ability to cover our clients with a non-medical product, no needles, no blood, no urine. That's a huge benefit. A lot of people, they're in a position where they're thinking, man, I want to get coverage, but I don't want to mess with having to do an exam. I don't want no one to come out and stick a needle in me. I don't know where that needle's been. All kinds of things go through people's mind, whenever they think of having to do a medical exam or something. And they don't want to do it. It's a hassle, right? But it's a lot easier to sit down with someone, take a short application, ask them a few medical questions, turn that into the insurance carrier, and then let them make a decision based on their history, as opposed to you take the application now, okay, Mr. and Mrs. Client, you're going to have an examiner contact you to come out and, draw blood, take your urine, check your heart rate, and all that good stuff to make sure you're still in good health. Another thing that can bring up unknown health ailments. I had a gentleman out at Cedar Creek Lake, and just right outside of Toole, near Cedar Creek Lake, and he 46-year-old man, 47, and totally healthy, good health. I mean, outdoorsman, and totally healthy. No medications. Didn't even go to the doctor. He didn't need to. He was healthy. He wanted to get a large amount of coverage, which was fine. I tried to talk to him. Look, let's get you covered with a non-medical program. Let's put the coverage in place. Let's put a safety net in place to make sure that you have your coverage, so you don't have to worry about going out and trying to get this coverage if something comes up in your medical exams. And sure enough, he's like, no, I'm healthy. Let's do the exam. Found out he had hepatitis. Now he's uninsurable. Uninsurable. I could have covered him with a non-medical policy. I had another situation where my client, lady, sweet as could be, I'm totally healthy. I just want to do the exam. I don't want to come out of pocket too much. Just understandable. She's mindful of her budget. But the examiner comes out, ends up she had real small veins, and the examiner didn't have, I think there was some kind of special needles that they need. So, yeah, some type of butterfly. And the examiner was trying to take the blood and was having a hard time taking the blood and was like, all right, I'm going to have to come back or send someone else to take the blood, but yet decided to check the heart rate. What do you think happened? Heart rate was elevated because she'd just been stabbed multiple times by it. And then the examiner noted that. And then, so it took me a year and a half to get this lady's coverage of going back and forth with the insurance carrier, having her go to her doctor, having the insurance carrier get her new medical records to contradict what her exam said. I mean, so, yeah. You have to get a letter from your doctor, and you have to write into the MIB. And then not only do you write into the MIB, but you send in that information into the carrier as well. So you're basically copying both places. And
sometimes there's somebody like to get blood pressure. If blood pressure is normal, once you said that, the blood pressure will shoot up.
Yeah, exactly. Yeah, just that type of exactly. Just mentally, absolutely. So, I mean, the point to being able to cover your clients with a non-medical product, that is huge. It really is, because so many things can go wrong with an exam. And not only that, you got to wait 30, 45 days for the results to come back and the insurance carriers to review those results, instead of walking out there and, again, sitting down with the client for a few minutes, taking the application, asking the medical questions. Here's where you got to be thorough, though. You got to gather the information properly. You enter that, you submit it to the insurance carrier, and they're going to simply review that and check their medical records as opposed to everything else that I just described. And so you can get your clients covered, and I tell them, look, let's get your coverage in place. And I talk to them. Now I have stories. I have things that I can tell clients that I want to go ahead and do an exam. I was in California not too long ago. I ended up doing a piggybacking 2 non-medical policies because mortgages are above average in California. I covered a $750,000 mortgage with 3 mortgage protection policies. And because I talked to the person, the person's yet to call me back about wanting to do an exam. If they do, that's fine. We can do an exam. We can do a whole blanket policy and replace the 3 non-medical. But they were just so adamant about not having to do an exam. And then when I gave them that idea, it's like, look, you don't have to do an exam. We can cover all 3 of them non-medically. We'll just use 3 different carriers, 3 different policies, and get you covered. No exam. So they didn't have to take an exam. They're like, well, if we do decide we want to try and save a few dollars each month, can we go ahead and do an exam later? I was like, sure, but let's get you covered now. Let's put a safety net in place. And basically, and a lot of people understand that. They want to make sure that their protection's there, and then they can take a chance on getting coverage. That way, if something comes up abnormally in their medical exam, their safety net's there. Their family still has protection. So again, our goal is to protect the clients that we sit down with. And again, when you have someone pass away on you, when you have these type of things happen, someone diagnosed with hepatitis because of an exam, I mean, it becomes very real to you, and you become very involved in making sure that your clients get covered. Most carriers pay advanced commissions daily. That's huge to us as agents. Again, being in a commission-based business, as the policy gets approved, we don't, in most cases, we're not having to wait the 30 or 45 days for commissions to be released. Normally, we're just having to wait a few days after the premium is drafted. So the client says, you write the policy on the 2nd. The client says, I don't want my premium drafted until the 15th. Well, you're probably going to be paid around the 18th or so because they draft the premium on the 15th. Now, if the client says, oh, I'm fine, you can draft the premium upon approval. They'll draft the premium upon approval, and then a couple of days later, you get paid. So, if the client, and the thing about the mortgage protection clients is most mortgage protection clients are fine with draft upon approval. Again, you're dealing with a little bit different class. You're working class, people with, consistent income coming in, as opposed to maybe a final expense market who that you're dealing with a fixed income. You got to make sure that it fits in their budget. You got to make sure and take care of them that way. Also, like I just mentioned, a solid market that has buying power. Now, not only do they have buying power, of course, to make their mortgage protection payments, but they also have other needs. They have other needs like IUL, retirement protection type needs, college funding needs, savings, and mortgage protection is kind of a door opener for other markets, for other advanced markets. They may have a 401k at their former employer or a 401k at their current employer that they're not happy with. And so again, you're dealing with the working class, you're dealing with people that are, looking to plan their future. There's other opportunity there with your mortgage protection clients. So it's a solid market that has, a lot of buying power. Clients that may have other insurance needs like IUL or annuity, I just covered that, again, that's very important when you're sitting down with your client. One of the things that I mentioned at some of my trainings, when I'm going through an application with a client, a lot of applications will ask about employment history or your former employer. Sometimes they'll ask how long you've been there. If they tell me, oh, how long have you been there? 2 years. Oh, really? By the way, remind me to talk to you about this. Have you taken charge of your retirement protection or your 401k at your former employer yet? Oh, no, it's still just sitting there. I don't know what's going on with that thing. I mean, there you go, So well, let me talk to you about that. Remind me when I deliver your policy, we can talk to you about that. And, again, so there's other opportunity there with mortgage protection. And it's a noble and profitable market. Again, you're doing good things for people. You're not out there, selling snake oil, stuff that people don't need. You're out there providing protection for families that's going to affect someone's family for, generations. And, so it's very important. And it's a great market. It really is. Now, how do I get in front of clients that want mortgage protection? You always hear us talk about direct mail. Direct mail is the time-tested and proven preferred marketing method. Say that 3 times real fast. But it is. I mean, when someone receives a letter and they take the time to fill it out and mail it back in, they have an interest. They have a serious interest. This is something that most people don't take the time to do. Most people don't fill out junk mail, if you will, fill it out and mail it back in, do they? Not very often, not unless they're interested, right? So, again, we reach out to people that, have just, refinanced a home equity loan, a new home purchase. There's also, reverse mortgages. That's another, trigger for someone to receive one of our letters. Now, again, find areas to mail to by requesting data counts in targeted areas. So you've come up with an idea, you're game planning, you're thinking about different areas that you want to work, your mortgage protection market in. Okay, this seems like a great area. There's, a lot of houses coming up. I want to find out how much data is available there. So send us an email. Send an email to the leads department. I'm looking at work in this county or this zip code. How many people are available to mail to? And the data that you're going to get back is the people that are available to mail to over the last 2 weeks. If you want us to go back further, we can. But this is fresh data, people that have just made a transaction. So we'll go back 2 weeks and we'll let you know how many people you can mail to in that area. So again, you can pick out these different areas and then utilize the B leads in the areas that you mail to. We talk about our leads being exclusive. This is the only lead that we have that is not exclusive, is our mortgage protection B lead. Our direct mail lead is exclusive. You're the only agent that's going to receive that. Now, we do have the opportunity for you to tap into, it's another mail house that we've had a partnership with for many years, and they allow us to buy their B leads, leads that have not been sold by their agents. We can buy those. Very inexpensive. $4 each. Now, again, you're going to get some business out of those leads. You can use those to supplement the area that you're mailing to. So you mail 1,000 pieces of mail out to a certain area, you get back, 12, 15, 18 responses, and then with that, you buy, maybe 50 to 100 B leads or whatever it is, and then you go out and you try to set as many appointments as you can. You try to set 20 to 30 appointments for that week. And it's possible, it's very possible to be done. Also, you can use a demographics map. Zipwho's one that I go to often. Zipwho.com, you can identify areas by population, by age, and again, you can identify these areas by income. So these are different areas that you can identify. So if you're not familiar with an area and you're thinking about somewhere that you want to go, look it up. Check out the demographics. Do a little bit of homework about the area that you're going to mail to or the area that you're going to market to. If you have questions, give us a call. Let's game plan on that. Look for growing markets. Dallas is a huge growing market. We have that benefit. Houston's another huge growing market. It's short drive, but it's a huge growing market. Again, there's so many different areas that are growing. If you happen to go visit some family in the area that you're going to, is out of state or what have you, doesn't hurt. Check to see how many B leads are available and check to see how much data is available. If you have a trip planned in a month or two, you could go ahead and do some mailings, take your trip, go on vacation, and then at the same time take your leads and go out and write, $4,000 or $5,000, $10,000 in production. That is very possible. I used to do that often. Now, also, be proud of what you do and let people know, and hand out cards every day. Hand out 10 cards a day, at least, minimum. Try to hand out more than that, but at least hand out 10 cards a day. Think about that. If you're meeting and greeting the people that you talk to throughout the day, or make an effort to go out and meet and greet people and just hand out cards, you're going to generate business, not above and beyond from the leads that you generate. The man with the most leads wins. How do you generate leads? You get in front of people. Be proud of what you do. People are going to be attracted when they see you talking to someone and someone's interested in what you're saying because you have passion about what you do. Other people are going to see that and they're going to kind of grab, oh, what's this about? You got another person to talk to. Hand out another card. It happens like that. People want to know, especially when they, light yourself on fire with enthusiasm. People are going to come watch you burn, right? So, people, they want to take part. They want to take part in something, bigger than themselves. And if they see something happening and they see that you're excited about it, again, they want to find out about it. So, be proud of that and, and hand out those cards. That's very important. This is the letter real quick. What it looks like that we mail out to clients. Again, they're going to get a copy of this letter. Very similar. Sometimes the format may be a little bit different depending on the state of the area that we mail to based on the regulations, but it's going to have the same information. It's going to let them know the same benefits that are available. It's going to collect the same information. When someone fills out their date of birth, and I don't know, Ray, we may need to talk to them about that and have just age on there just for privacy purposes. But still, when someone fills out their date of birth, male, female, if they're a smoker, multiple ways to contact them, sign it, and the day that they filled it out, they're pretty serious. Also, I mentioned earlier about reverse mortgages. Did you know in most cases that clients that have a reverse mortgage only have 30 days for their family to refinance the mortgage upon passing away? That's, I mean, mortgage company, they're going to get the house if the family's not able to take care of it, especially in a reverse mortgage situation. So if you sit down with the client, someone tells you they're in that type of situation, it just needs to pour out of you on how much you want to take care of them, and they need to be able to sense that. You need to be able to get that because, I mean, people in that kind of situation, there are people that have a reverse mortgage that don't know once they pass away, their family's not getting a home. They don't know that. Mortgage company's not going to tell them that. All they're going to tell them is, hey, sign up for a reverse mortgage. We'll pay you to live in your home.
On the reverse mortgage, how much are they getting a monthly?
Yeah, they're paying them back basically the monthly mortgage payment. And they're now, instead of their mortgage going down, their mortgage is going up.
So if they don't refinance in those 30 days, they lose all
They lose everything, yes, because they've done a reverse mortgage. And people, seniors, are in a situation where medical bills go up, stuff happens. That sounds pretty attractive to take that asset that you have, that, you know, the money in the walls, because it's not doing nothing right here, is it? But all of a sudden the mortgage company's sending you a check each month. That's not a bad thing in their mind. But all of a sudden they pass away, and all of a sudden all of their years of buying that home and investing in that home now goes to the mortgage company because they didn't know and their family didn't know.
So you said that for the financial, what happens to the new owner, the family? They're going to start paying mortgage now.
Well, exactly. They have to take a mortgage out on it.
Okay, and then the mortgage, which is
Well, it's not with the reverse bid, it just takes it out of the reverse.
Okay, so but now let's say the cost of the house increased. So now if it's let's say $250,000 for all the money they pay, then you add to that, right?
Yeah, because it goes up.
It's going to go up.
Right, so they'll have to refinance that amount. Yeah.
They just have to refinance the amount so that they get the reverse mortgage on.
Right. Yeah, whatever is paid out or whatever is owed on the house. Yeah. Right. If you don't take steps to refinance it within a certain period, within 30 days, that's why there's only basically the family in the home that's left in the home. If they're not on the mortgage or if they're not some type of taking over it, I mean, they got to get out within a certain period of time, and the mortgage company gets the home, unless they are in a position where they can go to the mortgage company and say, okay, we want to refinance this house. Whoever's living in the home or the family, whoever's the beneficiary, whoever would have been the beneficiary for it. That's just the family. Well, I mean, if they're living in the home or if they're, the family's beneficiary or something to that effect. But basically the point to this, if the family doesn't have the money, the mortgage company is going to take the home in 30 days. Bottom line. And that's the need is even greater in that type of situation. Also, this is very important. Know your numbers. Knowing your numbers will allow you to game plan for income. Bottom line. Like knowing the historical return rate for selected areas is going to help determine the cost for generating a lead. What do I mean by that? Let's say it's $600. It's $5.90 to mail out mortgage protection mail. So you mail out 1,000. Let's just say you get a 1% return. So you get back 10 back. That means that your lead cost is $59 per lead, right? So you need to know that. You need to know what it costs to certain areas. So if you're thinking about working in an area and they tell you that the return rate here is 0.8%, you need to be able to know that, okay, that my lead's going to be, a little over $60 a lead if I decide to mail there at a low return rate. Another thing that you need to know, your conversion rate, of how many leads to get one appointment with either your exclusive leads or your B leads. Now, we know in mortgage protection we do a lot more phone work than we do in final expense or that market. So you have to know if I get 10 exclusive leads, that I'm going to be able to, I should at least be able to set 6 or 7 appointments minimum. You should know that. Out of those 6 or 7 appointments, you should know that you're going to go out and close 50% of those, 40 to 50% of those. Again, That's going to help you determine. That's going to help you project your income. That's going to help you project how many leads you need to buy. That's going to help you determine what area that you need to work in. Your close rate on your mortgage protection exclusive leads, again, you need to know what you're closing. When you sit down with your client, you need to know if you're closing 3 out of 10 or if you're closing 4 out of 10 on an average basis. And again, if you're closing 1 or 2 out of 10, we can sit down, we can do a little bit more training, we can find out what's being said, what's not being said, and make sure that next time you sit in front of the client, you're able to lead them through the process, a little bit more confidently. I think I skipped ahead there. And then also know your close rate on mortgage protection B leads. Same thing. It may not be as high as your exclusive A leads, or it may be just the same. But it's going to be close to it. I can tell you that from experience. Because again, if you get the appointments that you get out of your B leads is not going to be as high. If you have 10 exclusive leads that are fresh, you're going to get 6 or 7 appointments minimum. If you take advantage of the B leads that we have out of 10 of those, you're probably going to get 1 or 2 appointments out of every 10. It's nowhere near as high. But again, they're only $4 a piece, less expensive, and you use those to supplement the area that you're mailing to, the area that you're marketing to. So know your numbers. That's very important. Knowing your numbers will show your bank account some new numbers, right? So that's it's very important to know your numbers. You hear it, numbers don't lie. If you know your performance and you know your numbers, again, you can project your income, you can project the areas that you need to work in. With that, I guess take a little break. Ray, did you have anything to add before we?
Yeah, we're going to take a 10-minute break. We're back here. We'll review everything. Tell you guys get some water there, but I'll everybody come back to the room. And we'll finish up here next.
All right.
10-minute break, and everybody come back here. All right, thanks, guys.
Thank you. Thank you.
Here's a hand, by the way.
Thank you. Thank you. All right. Thank you guys for being on.